pretty good. We'll go ahead and get started. Thank you again for taking the time. My name is Bailey Williams. I am the tax policy researcher at Policy Matters Ohio. This webinar is to give folks kind of some rapid response information surrounding the flat income tax proposal that was included in the Senate version of HB 96, the main operating budget, wanting folks to have relevant information that is that gives a accurate, true picture of our revenue situation, that tells the truth about what is going on with our revenue picture, and undercuts kind of a lot of the messaging that we're hearing from a lot of the supporters of it, who are, in my opinion, who are misguiding or distorting the truth behind a lot of this irresponsible tax policy that has been coming out of the state house, both in this budget, last budget, and over the last 2 decades, really. So with that, let's go ahead and get started here. We have a brief agenda here for folks. I don't want to take up the entire half hour. I do want to have time for questions here at the end. So an agenda for today, we're going to go through some of the facts of the 2.75% flat income tax that was included in the Senate version of the budget. We'll talk about the costs of this to the state budget, who's benefiting from this tax cut, who the main beneficiaries, and what this is going to do to our tax code. It's really going to entrench the big inequality in our tax code that's going to have us reliant on regressive taxes that take up more income from lower earning individuals. As I said a little bit earlier, we're going to kind of dispel a lot of these myths about state income tax cuts. The main thing that they generate revenue and elsewhere, or they stimulate more income tax revenue. It's fanciful pseudo economics, I like to say. We do not see the data from from the tax department shows that we are not seeing increased revenue either over the last 2 decades, over the last 2 years, that these tax cuts are not paying for themselves. And we'll get into some of the data about that. We're going to finish up with some opportunities remaining to us to get this flat tax removed out of the budget, some talking points about how folks can talk about this in an easy, digestible way, and advocate on tax policy for the interests of your policy priorities. Because without the tax revenue to fund any priority, no matter how good, bad, or different, we need the tax revenue to fund it. So it's important we have the money to fund the sound public services that everybody advocates for and the state needs. And we'll wrap up with Q&A with PMO staff. So with that, let's go ahead and get into it. Here are some of the main consequences from the 2.75% flat tax. The Senate version would slowly eliminate one of 2 remaining tax brackets in the Ohio personal income tax, the 3.5% tax bracket on income above $100,000. So what this means in basic terms, the cost overall is that this tax cut is going to cost by fiscal 2027 $1.1 billion a year. Over the course of the biennium, as it slowly erodes that top bracket, is going to cost close to $1.7 billion over the course of this budget. The cost of that, the benefits, the beneficiaries of the tax cut, no Ohioan making under $100,000 will see any meaningful tax change from this policy. It's there are minor tax changes, adjustments to the taxes paid on income above $26,000. Those are minuscule. Most of the benefit of this is going to individuals making above $100,000. The main beneficiaries, the biggest ones making out from this tax cut are the Ohioans and the top 1% of earners, who are getting over 40% of the benefit of this tax cut. So of the $1.1 billion that'll eventually be foregone each year, 40% of that is going to the top 1% of Ohio earners, who have an average income of over $1.7 million. And they're getting an average tax cut of about $10,000, very close to $10,000. So we, very simply, no millionaire in Ohio needs a $10,000 tax cut. We do not need to do this. This is really just a handout to the wealthy first and foremost with this tax cut. So this has very serious implications for our tax code overall. This with a flat income tax, if we were to go down this route, it would really entrench inequality in the state tax code. As it stands right now, the state income tax is our only tax based on your ability to pay. It's the only tax that asks the rich to pay a little bit more. That's that 3.5% on income above $100,000. Considering our tax system as a whole, our entire tax code is completely upside down, where it has the rich paying a lower share of their income compared to the lower earning Ohioans. A shift to a flat income tax, where teachers and librarians are paying the same tax rate as professional athletes, as corporate CEOs. This is only going to entrench inequality by making our tax code more reliant on regressive tax systems or tax policies, and eliminating the only tax that offsets that regressive tax policy. It's the only tax that asks the rich to pay a bit more. So with that flat tax, we get rid of any progressivity, any form of equity in our tax code, and it's going to entrench this tax system where the rich are paying a lower share of their income compared to the lowest earning Ohioans. This the tax system though today, or that we have today, is not just a system or a consequence of the last tax cuts in the previous budget, but it's been a part of this generational shift on in our tax code that lawmakers have been bragging about, that they're proud about, a part of this generational tax shift over the last 20 years. And this is where we get into the myth that these tax cuts have been paying for themselves, that they've been generating revenue elsewhere. Um, this great Ohio tax shift and a generation of income tax cuts that have failed to materialize in terms of new or new economic activity that has led to increased tax revenue. So how did we get here? How did our overall tax system get here? What has caused this overall or this upside down tax code and this artificial scarcity where revenue is running so tight in our tax system? It's a generation of income tax cuts. Since 2005, there have been comments from I believe Senator Serino, commenting about how we've been gradually cutting our taxes, a 20-year project to flatten our income tax. What is the consequence of doing that for 20 years, for a generation of income tax cuts? It's led to a foregone revenue of almost $13 billion each year. So because of these tax cuts, which have mostly gone to the rich, if you're the richest 1% of Ohioans, most of that, the richest 1% have gotten over $50,000, or paying $50,000 less in state and local taxes through this generation of income tax cuts that, like I said, lawmakers have been bragging about, that they're proud about. All of these tax cuts have been going to the rich primarily, and it has not it hasn't led to a boom in economic activity or revenue increases. So let's get into some of what those tax cuts specifically have been and what that connection to that revenue picture is today. So these are some of the tax changes from our last budget, from HB 33 in uh, the last General Assembly. A slew of tax cuts to both the personal income tax as well as commercial activity tax. Most of this $900 million a year in tax cuts, very close to the price of the flat income tax, most of that went to Ohioans making six figures, most of them who are going to be the same beneficiaries from the flat tax. Changes to our commercial activity tax are costing us over $500 million a year in foregone revenue. All of these justifications, which are similar to the justifications that lawmakers are pushing now to go to the flat tax, was that these tax cuts pay for themselves, that we will have generated new economic activity from companies wanting to move here, from people opening business here because of the low competitive tax climate. That is what we've been sold for the last generation. That's what we've been sold the last budget, and that's what we're being sold now. Well, what's the evidence? What does our revenue picture look like? Can we have some comparative comparable data to show, to compare these claims, to validate these claims? We do. And we show that these claims of new economic activity and new tax revenue are not true. The data proves otherwise, that the data proves that these lawmakers are not telling the truth. Let's look at fiscal year 2023, the year before HB 33 went into effect. So HB 33 is the first year for fiscal year 2024. What we can see in fiscal year 2024, there was almost $1 billion less in tax revenue from one year to year. That's it before accounting for inflation. We see a massive drop in overall tax revenue, mainly due to the income tax cuts that we just went over in HB 33. We lost almost $1.3 billion from fiscal year 2023 to 2024. And these massive losses were not offset by gains in either the commercial activity tax or the sales and use tax. And again, that's before we even account for inflation. When we do, that picture gets even worse. Let's adjust for inflation. We can see just how dire our economic situation is across all taxes that the state tax collector or the state tax commission administers and collects almost $29 billion in tax revenue in fiscal year 2023. When we adjust for inflation in fiscal year 2024, so express those dollars in 2023 dollars, because we know a dollar today is not worth as much as it was yet last year. That's how inflation works. So when we adjust for that, we can see that from fiscal year 23 to 24, there's a revenue decline of over $2.6 billion across all of our tax code or all of our tax collected. And then every individual tax saw a tax decrease or tax revenue decrease when adjusting for inflation. We are not seeing increases in our tax collections from these massive income tax cuts. What we're seeing is just massive handouts to the wealthy, where we're not getting the promises of new economic prosperity. It's simply put, they're not paying for themselves, and lawmakers are not telling the truth when they try to sell this to us. So all of that information being shared, I know it was a lot covered very quickly. Kind of an overarching theme, encapsulation of this presentation and what kind of policy matters is suggesting pushing forward and paramount when it comes to tax policy in the remaining time that we have for this budget is that it is paramount that this flat tax is removed from HB 96. We still have opportunities to do so, even though that window is closing. The very first paramount thing that we can do collectively is call out lawmakers when they try to distort the truth on offsetting revenue. This is probably the most important thing, is to call them out. I don't want to say anybody's directly lying, but when they try to, when they're using this, I will say misinformation, when they're using these wrong data points to try to sell these tax cuts as, we just need to go to do this one more tax cut before we finally get to this economic prosperity. There's no reason to believe that the previous 2 decades of tax cuts or the previous budget's tax cuts are finally going to lead to that new economic activity, that new tax revenue, so we can finally afford to pay for schools, to pay for libraries, to pay for childcare, to pay for healthcare. We, these tax cuts aren't selling themselves. Flat out calling out lawmakers on that lie is important. In our remaining time that the Senate is debating the budget, have any opportunity to call lawmakers and to tell them to remove this budget or remove this from the budget during the Senate debate, and then in the coming forward conference committee debate is paramount. Voicing your disapproval of the inclusion of the flat tax and this handout to the wealthy. Should those efforts fail, we are going to include a strong message to Governor DeWine to veto any flat tax, move to a flat tax, and this shift to or this handout to the wealthy. To help with advocacy, these are some mainline talking points that we're formulating and having and sharing around to folks and individuals on pushing back on the flat tax that will be available in this slide. We're putting out in social media materials, and we will also, as part of policy matters, we've posted over the last couple of months a revenue roundtable that includes a tax toolkit. In the email that comes out after this, following up on including the recording of this presentation, will include these talking points and access to this revenue roundtable's tax toolkit, which will include talking points in these one-pagers, this presentation slide. So if folks have access to these talking points too, they can include that in their advocacy to push back on this fiscally irresponsible tax policy. So with that said, I know it's a lot of material, a lot of dense tax material, and not a lot of time. That is the kind of the main encapsulations of where what Policy Matters has on the flat tax and how poor of a policy it is. What we can do as advocates to push back on it to ensure that we have the tax revenue to fund our public goods and services. Um, Thank you, everybody, again, for making the time to hop on this call on such a short notice. I'm happy to take questions now that folks have them. I see one question now in the chat that asks if the flat income tax will be on Social Security and retirement income. So that question, that's a good question. Um, the the move to the flat tax does not change or treat any types of incomes differently. It doesn't exclude Social Security income or retirement income specifically. So it would not, it would still tax Social Security and retirement income, just like any other like wage income or earned income in that manner. The federal level, there are changes possibly coming down the line on that. But as of right now and with the budget bill, it would not change the treatment of Social Security or retirement income. It would still be covered under this flat tax proposal. We haven't had too much success in pushing back on a lot of the tax cuts that have gone through in the past. I do think a big difference between this tax cut and previous ones is who's benefiting from it. Is yet, yes, previous tax cuts, income tax cuts have primarily benefited the wealthiest, but this one in particular is egregious in who's benefiting from it. The overwhelming benefit of this is going to Ohioans making above $100,000. And the cost of it, yes, it's the opportunity cost from that. What can't we do with this $1.7 billion over the biennium now? Yes, many people are going to be cut off from Medicaid. The lead abatement programs are going to be cut. Um, the food bank assistance is going to be cut. A lot of those programs are going to be what can we be doing with that $1.7 billion is a good talking point to push back on, hey, why are we giving that to people making $100,000 instead of, making sure kids don't grow up in around lead-based paint or things of that nature, or have lead pipes in their houses, things like that. Um, Another question: what is the best argument that a low income individual can give in speaking out against the flat tax? Well, one of them is that, great question, is that I won't bet anybody making above under $100,000. I'm not getting a tax cut. I haven't seen the benefits from that. That's ask, the benefits and strengths of of an income tax, especially a progressive one, is that it asks the rich to pay more. These previous decades of income tax cuts haven't given me either a sizable tax cut or led to new economic activity or growth. It's just led to my school districts have to rely more on property taxes. That the whole litany of failed or local government funds have been gutted. That we're having to rely on different types of taxes. We have to um, um, essentially, yeah, why keep giving these handouts to the wealthy when I'm not getting anything and there doesn't seem to be there's no tangible benefit from these to excuse keep going down this path. Okay. Great question, Gail. Another question. I know one common conservative pushback on a progressive tax says that lowering taxes to a flat tax on the rich increases enforcement because rich people will report their income at higher rates. Is that something conservatives in Ohio are talking about, especially showing how income tax revenues did go up after some cuts in 2020? How do you talk about that time period specifically if someone tries to go in depth? So that's a very in-depth and very great question. Me personally, I haven't seen or had too much conversation specifically about, hey, 2020 did lead to increased tax revenues. I do know conservatives will say that increased tax or these tax cuts didn't hurt revenues, or we had increased tax collections in spite of tax cuts, but they will then try to use that justification as tax cuts cause increased revenues, which is not the case. I mean, that this was what this presentation was going into, was giving evidence directly to the contrary, that we have not seen increased revenues and that there are extraneous economic circumstances that can be pointed to as reasonings for that increased revenue. Broader federal spending, more Social Security programs being funded through the federal level, pullbacks on enforcement of various of programs that are designed to means testing programs, like people weren't being kicked off their health insurance through Medicaid at the time. Rental assistance was flowing through a lot more. People weren't having to spend their limited income directly on those tangible programs, so they were a little bit wealthier on paper. But as we saw, as those programs came to a close after the federal health emergency ended, that we saw a big retraction in the wealth that people were reporting that those tax revenues clearly did not stay long. We're seeing I don't think it's a lower nominal increase in or a lower nominal number in tax revenue, income tax revenue in 2020, but it's definitely lower in terms of adjusted for inflation. So to that point, I wouldn't it gets too caught up in that income tax cuts won't or generate to or lead to increased economic activity that leads to income tax revenue increases or overall tax revenue increases, which it doesn't. That's not it. There's evidence that points to the contrary, and I think it's better to focus on that aspect of it. Cheryl's question. I noticed that Pennsylvania has a flat tax. Their model is different from ours. What evidence from their structure can we use? So I'm not entirely sure. Yes, Pennsylvania does have a flat tax. I'm not sure if it's constitutionally required. I do know states like Michigan, and Illinois, states around us that have flat taxes, they are constitutionally prohibited from enacting anything other than a flat tax. So their legislature does not have the ability to change their taxes to tax rich individuals at a higher rate. And I think that's often missed in the broader uh, tax conversation is that a lot of these flat tax states aren't moving directly or moving towards a flat tax. There are some, yes, there are some. Iowa has, Kentucky has. Um, there are a few examples, but most states that do have flat taxes are constitutionally prohibited from enacting anything other than a flat tax. Michigan is one of them. Illinois is one of them. So, and for states that don't have income taxes, that's a similar thing. Texas is constitutionally prohibited from enacting an income tax. Washington State, similar thing. Florida, similar. Constitution prohibits them. So, I would caution against taking too many models or too many lessons from states that have very stringent constitutional limitations on the types of taxes that they have. We have the ability, we have the constitutional prerogative and authority to tax rich people at a higher tax rate. Zach Schiller just put in the comments. Yes, most states have graduated income taxes. I think it's still over 2/3 of US states have graduated income taxes. So that is more common than the 8 states that have no income taxes or the 10 or 12 or so that have flat taxes. So I think it's best to take the models from states with progressive income taxes that tax everybody, no matter of their income, at similar rates, because we have to take into consideration progressive taxes like the income tax in similar conjunction with regressive taxes like sales and property taxes. Um, that's kind of the overall model I would take from it. If you want to, a partner that we work with quite often, the Institute on Taxation and Economic Policy puts out a report called Who Pays that looks at all 50 states and their tax systems and compares them in terms of the income quintiles, similar to here, I'll go back to the slide real quick. ITEP puts these slides, this chart breakdown for all 50 states, and I encourage you to compare states with flat taxes and states with no income taxes to states with graduated income tax brackets. And we can see the states with no income taxes are often branded as low tax states. That's only true if you're rich because they are more reliant on regressive taxes like the sales tax, and particularly Florida. Thank you, Ben, for putting that in the chat. That it's only a low tax state if you're rich. And moving to a flat tax like this in Ohio just means that we're creating a more inequitable tax code. That's really the lesson I would take away from states with flat taxes or no taxes, or no income taxes. And one final question here. Can you speak to focusing advocacy on the House members who will be a part of conference committee versus the governor's office hoping for veto? Seems like, yeah, Dylan, I think you're right. Unfortunately, that the Senate seems very gung ho. Hopefully, is still putting pressure on it to making them well, one, calling them out on their misguided distorted views on that these tax cuts will pay for themselves. They won't. I think that's calling them out is probably the best thing that we can do for the Senate members in particular. But for the House, um, I would put pressure on the fact that without the income tax revenue that we have here, that it makes the tax system more reliant on these regressive taxes. I know Huffman and Stewart both said that they were more interested in addressing property taxes, and I'm not trying to endorse what they did on property taxes. It was certainly atrocious, but without income tax revenue, it makes that system more reliant on property taxes and harder to do anything there. So I'm not sure which members are actually going to be a part of the conference committee, but putting that pressure on ensuring, showing that, you know, if property taxes are a particular issue in their district, that this makes it this puts the state in a worse position to be able to do something tangible and meaningful. Um, what's another that's a really great question. I think it kind of just it depends on some of those the conference committee members. I think similar to the kind of conversation that's going around with how the legislature wants to fund the Brown Stadium. Similar kind of messaging of like, why are we giving taxpayer dollars to, or why are we trying to give these programs directly to millionaires, or giving funding to these rich, wealthy Ohioans. I think kind of the messaging could be very similar to the tax cut. It's like, why are we giving tax cuts to the wealthy, to the rich? Why are we letting them off scot-free? And if they try to go back to that, they invest in the economy, they'll develop new jobs. There's no evidence to that. Point them to like, we have no new revenues for that. You can't hire a new employee with $10,000 tax cut. All the rich are going to take with that is buy season tickets to the Buckeyes or something like that. So that would be kind of the argument that I would angle with. But uh, I'm curious to see which members who are House members are going to be particularly engaged and active during the conference committee. That's a good question. I want to again thank everybody for taking the time today on such short notice to uh, hear about such an important, very important and meaningful item on the budget that is kind of that can be complicated and convoluted. I hope these resources will be very helpful in terms of advocating around tax policy, making it more accessible, less daunting, and giving you the resources to really push back on the misguidedness and distortions that are coming out from the advocates of this policy. So thank you again for taking the time. I will be sharing these resources out directly with everybody who registered, giving folks access as well to our tax toolkit to continue their advocacy on the tax front. Continue to look out for more coming down the pipeline from policy matters on continued advocacy and pushing back on the flat tax as we go forward. Um, I think that's all that I have. Thank you again for everybody, and best of luck to everyone in their continued advocacy. And I hope everyone has a great rest of the day and great weekend. Thank you all.